Morning everybody, it's Chris here from Serene Education with the 4 majors and notes update for the 2nd of February 2012. It's going to be going with 4 majors, starting with Euro against US dollar on our CTC strategy template. Let's have a look at the daily. So, what happened yesterday? Well, we saw price pretty much testing that 50 period moving average once again. You'll notice here over the past week or so, price has been pretty much holding its range across the 50 period moving average. We've had 1, 2, 3, 4, 5 consecutive days now where price has been sitting comfortably above this 50 period moving average. And CTC on our strategy template is still negative. You'll notice that we're still very much in a negative downside trend, and we've seen just a pullback against the major trend over the past couple of weeks. So as it stands, you can quite clearly see there happens to be a prior support and a resistance. Notice the past couple of days price has failed to actually pretty much trade above, in this case here, if anything, the 13,2500 mark. Okay, so price, ideally if you want to see price extend further, we'd ideally like to see price extending above the 13,2500 mark, and by doing so it gives a clear indication that price is still looking favorable for further topside movement. At the moment now, hesitation, consolidative range. We have seen some whipsawing backwards and forwards, but the whole thing that price is trading or sitting comfortably above the 50 period moving average tends to potentially favor a potential further extension higher. This morning, Asian market trading, you can see not much really happened. Yesterday's candle closed higher than the previous one, so engulfing that range. So as it stands now, price hasn't really moved that much on the Asian market session, retesting those highs that we saw prior, 2-3 days ago. But ideally what we want to see from price is a nice bullish engulfing, breaking above this 13,2500 mark, therefore confirming that price is still looking for further upside movement, and in doing so we should be looking for further extensions higher. Points to notice will potentially be this previous support and resistance here at 13,4500 as a potential target if and when price breaks above that. Another scenario would be with price actually pretty much sitting here doing absolutely nothing, going sideways. It tends to agree that there's got to be some sort of hesitation. We clearly know that things in the ongoing issue with Greece is still a problem, and I think there's a bit of a stagnation at the moment now as to the next funding available to the Greek government. And I know some institutions are dragging their feet, but that's something to take into consideration. The longer it fails to break above this 13,2500 mark, more likely is that we can obviously see price fall over. We saw the same thing happen over here back in December. Same thing happened in early December. Price failed to materialize. It went sideways, and because we're still trading against the major downside trend, we saw price revert to the downside. So, all importantly, rather wait to see a comfortable break above 13,2500 and close above it to confirm that yes, price is still willing to go higher. And, ideally, we want to see a nice engulfing candle, no wicks. We don't want to see something along this formation, especially at this level here, because then it's just a piercing. It's just a piercing candle. It's just false, just pretty much taking people in to go long, only for price to go to the downside. So we want a nice bullish engulfing, no wicks ideally, to confirm that further upside movement is genuinely the next port of call. If not, we see a piercing candle and more price action at the bottom of the candle, then we should be looking for potentially shorting opportunities for the remainder of the week or the next couple days or weeks. Just looking at the hourly chart, you can quite clearly see that we've had a number of tops here. Price is failing to really rally above that area, so it's one thing to be aware of. We genuinely want to see that, as I mentioned on the daily, we genuinely want to see price really pushing higher and closing higher with a lot of momentum. Without that, this is pretty much looking like it's pretty much stagnant. And if we just go and plot a relative strength index on here, you can quite clearly see what we want to see is divergence, as price has pretty much been going sideways. So if I can just plot this on here quickly just to show you, you can quite clearly see as price has been heading higher, they're pretty much bottoming out, topping out at 70, which is overbought. And as it stands at the moment now, price hasn't reattempted, and you can see relative strength is moving. So this is genuinely a consolidation You can quite clearly see on the hourly we are starting to see some sort of wedge pattern occurring here, and we need to see a breakout soon. So if we see price failing to hold on to these levels here at 1500, then we could see price returning to the prior lows over here that we saw previously, where price has been testing anywhere in between this level here at the 1305, 1307 mark. If price is unable to hold these highs here at 1500. Next up is the sterling against the US dollar. Let's have a look and see what's happening on the daily. You can quite clearly see that a very long extended trend to the upside. This is a major pullback against the major trend. Notice that price pretty much touched the 15,300 mark, which happened to be price support back in early September and October of this last year. And this January we saw price bouncing higher. A number of days of indecision here, spinning tops, dojis, and then a bullish engulfing to confirm that there was more buying sentiment creeping into this, and sure enough we've seen this massive rally to the upside in the past couple of weeks. So where to for this pair? Well, yesterday's candle also pretty much moving higher after an initial pullback in the trend, but however you can see price has been trading above the 15,700 mark, which I mentioned yesterday. As long as it trades above that, then we should see further extensions higher, and sure enough we are seeing that. The CTC on our daily is giving us an indication we should be looking for further highs, and on the Asian session this morning going to European session, we have seen price slightly creeping higher. Just be aware that it is excuse me, end of week, and we are looking at the non-farm payroll figures out for the US later on Friday. Until then, we also got tentatively sterling will also be looking at what happens or occurs with Greece and its next the bailout funding. But as it stands over here at the moment, you can see quite clearly price is really moving to the upside. Is this risk aversion trading? Pretty much sounds like it. We are seeing price moving higher on this news. Where to for this pair? Well, as you can see, the further back here in November, October, November of last year, the institutional moving average was clearly an area. So we could looking at 15,900 as our potential target in the next couple of days as price continues its move higher. So as it stands now, intraday, notice on the hourly, for example, over the close of yesterday going into the Asian session, price is pretty much moving sideways, not really giving us any confirmation for further extensions. So ideally we'd like to see price breaking above that. So a definite close, ideally above 1586, or if you really want to be more you want to wait for a definite confirmation, then 15,800, but we need to see a nice bullish engulfing. We don't want to see a wick like this. So if you're trading the hourly, rather wait for a nice bullish engulfing candle, something like that. Not as big as that, but nonetheless really showing us conviction that price is moving higher. At the moment now, price is just pretty much trading sideways, very indecisive, a lot of spinning tops here. The candles aren't all that big. We don't want to be sucking into something like that. So we want to see a nice bullish engulfing above this area here to confirm, look, price is looking to trade higher. CTC pretty much remains on our hourly chart, still very, very positive. Decent upside trend, bounces along the way, and we can expect prices to continue this way as long as we get a decent break high. You can see there is a channel top here. Sure enough, prices are moving in this trend. So ideally we want to see a break above 1586, nice punch higher over the next couple of hours to confirm that price is still interested in moving higher. If not, just plot a relative strength index on here just to give you an idea, are we seeing convergence or divergence on price as we're moving higher. In this case, I just want to put it over here so we can see what the story is. You can see as price has been hitting these highs here, you can see relative strength has been pulling back. So this is definitely confirming that this move over here is not being sustained by relative strength, which tells you that the move is not really correlating, and we should see potentially a pullback over the next couple of hours if that's the case. So and where would it go to? Well, two places, primarily back to prior resistance here before we saw the breakout, which will bring us back to this trend line over here at roughly the 1575 or the 15800 mark. So as it stands now, look for a potential pullback as relative strength pulls back on its market, as price is still trying to touch these highs. Expect some sort of pullback before we see further continuation to the upside. Next up is US dollar Swiss franc. Let's have a look at the daily. Here again, we've news that price has been falling back here. The US dollar pretty much losing ground against the Swiss franc, and in doing so, Swiss franc is pretty much strengthening. However, we had a case in point last year where the Swiss franc pretty much gained too much momentum, and the Swiss government intervened. You'll notice here at 85.50, 8600, this is where price pretty much, where on the Euro Swiss franc, the government wanted the price trading above 120 and nothing less. And this happens to be the 85.50, 8600 mark on the US dollar Swiss franc, and sure enough, you can see this intervention candle here pretty much taking price well above that area, and since then price has pretty much been edging higher. Since then we've seen price pulling back, and over the past couple of days a floor being made on this pair here just above the 9100 mark, which happens to coincide with prior resistance support in the past in early November and December of last. So as it stands now, are we seeing this as potentially a bottom? To see further extensions lower, the CTC is giving us a sell signal. However, we don't want to be selling into a potential support. So if this is a genuine sell, we'd like to see a nice bearish engulfing taking us below this level. We could expect a pullback over the next couple of days and then continuation lower. What we could expect here, the longer for this to go sideways here, then we could expect a nice support being forged and then a change in market sentiment, i.e. a nice bullish engulfing here. We definitely confirm that we should be looking for buying to come into this play, and then we should be looking for potentially the 9300 as our next potential target if that's the case. So very, very important. We don't want to be buying or selling into this one, so stand steady on this one over here, stand aside, wait for price to give us a genuine confirmation, i.e. Either in the next couple of days a nice bullish engulfing with momentum to see 9300 as a potential target to the upside, or bearish engulfing taking us below 9110 and closing lower to give us indication that we should be looking for further downside movement on this pair. Last pair of the day is the US dollar Japanese yen. Let's have a look at the daily setup on this pair. And there's been word going around that there's potential intervention on this pair, as price has really pretty much been putting in lower lows. As I mentioned yesterday, we saw intervention not too long ago when price got to as low as 75.50, and we saw the Japanese government pretty much putting in a show of strength and trying to push or trying to buy US dollars and sell their own currency. That didn't pretty much phase. It pretty much topped out and then went sideways, and over the past couple of months it's just been trading sideways, but with sentiment to the downside, and we are heading toward those areas again. So potentially, are we going to see another show of force by the Japanese government to intervene to try and stem this bullishness on the yen, and to try and get the US dollar to show a bit of strength? It remains to be seen. Intraday trading, you can see quite clearly on an hourly, for example, over the past couple of days, you can see prices pretty much going sideways, not with a lot of conviction. And the last hourly candle, a lot of selling, but you'll notice that price action's pretty much hugging the top of this candle. Is it trying to show us that this is a hammer now? This is a clear indication of show of strength, a hammer potential. This candle's got to obviously close this way. If it does close like this on a support area, roughly around this area, then it could be an indication, that we're potentially seeing a bottoming forming, a nice support being forming with a lot of buying support power coming into play. And if that's the case, then ideally we want to see a nice bullish engulfing after that to confirm that the sentiment is correct, and we should be looking for prices to break above the prior highs here, roughly in the 76.3500 mark, to see any conviction or movement to the upside. If that's excuse me. So stand aside, wait for this hourly candle to close. If that does, then it could be showing us a show of force. And then look at the 30-minute candle to nice close, nice bullish engulfing, and then we should be looking for at least a top here at 76.40. A break above that would definitely confirm that we should be looking for higher highs over the next couple of days, weeks, and anything up to the institution moving average. This price support and resistance here at 76.70 could be a first port of call as we see extensions higher. However, if we see this hourly candle not forming and it closes lower, then you'll notice that for the first time in as many days, price is now broken lower, which is telling us that the market sentiment is still favoring downside movement, and then we should be acting according to that. So that's it, guys. Hope you have a fantastic trading day. Keep it simple. Let the market show its hand before actually going in and placing trades. A lot of the pairs, the four major pairs, are all in these consolidation ranges. A lot of intervention word out there for the US dollar Swiss franc or Euro Swiss franc as we head close to those areas. The same for US dollar Japanese yen as the yen gains strength against the US dollar. And cable and euro are pretty much sitting pretty at the moment now, trading risk aversity, and looking at what the next step is for the funding for particularly Greece in this particular case. That's it. Trade well, and most importantly, trade serene.